आगे 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 कुछ स्टूडेंट भेजा। Very good morning, everyone. How are you all? Everyone fine? Now, last class we started IND AS 37. Have you revised whatever we have done? If you have any doubt, you can ask me. But there is one doubt come to IND AS introduction, question number 9. IND AS introduction, question number 9, question bank. Let us read the question. Fresh Vegetable Limited was incorporated on 2nd April 2001 under the provision of Companies Act 2013 to carry on wholesale trading business in vegetable. As per audited account of the financial year ended 31st March 2007, whenever they write down in this way 20x1, 20x7, it means you need to consider it as what? Relevant year. Means you can't consider at 2001, you can say it is 2011, this is 2017. 2017. Correct now. Are you able to understand? In exam, so they will write down the exact year. Got this point? Approved it in his annual general meeting held on 31st August 2017, we can read his net worth for the first time since incorporation exceeded 250 crore. So it exceeded 250 crore. Understood? The financial statement since inception till financial year ended 31st March 2006 we have prepared in accordance with companies accounting standard rules 2006. It has been advised that henceforth it should be prepared is financial statement in accordance with the company's Indian accounting standard rules 2015. So can you see from 1st April 2017 the IND AS will be applicable because the net worth is 250 crore or more. Correct now. So from that phase it is applicable to all listed company and unlisted company having a net worth of 250 or 250 crore. So first point is clear. The following additional information is provided by the company. FBL has a financial year 2002-2003. In the financial year 2002-2003, enter into a 60-40 partnership with a Logistic Limited and incorporated a partnership firm, Vegetable Logistic Associate, to carry on the logistic business of vegetable from farm to market. Now, right now we don't know the meaning of joint venture. We'll do the meaning of joint venture in IND AS 111. Now, what IND AS 111 says that joint venture is an arrangement, contractual arrangement whereby two or more than two parties carry on business under joint control. This is the meaning given under IND AS 111. Then they say that joint arrangement are of two types: joint operation and joint venture. So IND AS for this roadmap they have said joint venture, not joint operation. Means can you say this partnership firm can be a joint operation? It can be a joint venture. Now when it will be joint venture, when it will be joint operation, detailed discussion will do where? In the respective IND AS. So I am till now we have not done a definition of any term. Correct now. So can you say in this way, if suppose partnership, this partnership firm is a joint operation, then to IND AS will not be applicable. But if it is a joint venture, because it is applicable to FBL, it will be also applicable to what? This joint venture. That is only given in the answer. It might happen if you read the answer, you have a doubt about joint operation and joint venture. So as per the IND AS rule, they have said what? Parent company, subsidiary company, associate and joint venture. They have not mentioned joint operation. So if IND AS is applicable to any company, to their joint operation IND AS is not applicable. To their joint venture IND AS is applicable. Understood this point? So that is given in the question solution. When you read, it is quite possible you have a doubt about joint operation and joint venture. So just write down refer IND AS 111. For the meaning of joint operation and joint venture, we'll go to IND AS 111. 111 means 111. Understood this point? Then they have said FBL also has an associate company. Correct now. The name is Social Welfare Limited, that was incorporated in July 2005 as a charitable organization and registered under Section 8 of the company. So can I say to an associate company it will be applicable? If a company IND AS is applicable to their associate company is applicable even though it is a charitable organization, irrespective of the fact it is a Section 8 company. So that is not a point which need to be considered. So to all company, whether it is any company, if it is an associate company, it will be applicable irrespective of the fact that it is a charitable organization. Understood? This was the doubt which was asked to me. Correct? Any doubt, whatever you are asking, if I feel I will consider in the class. Got this point? Then one question is there, question number 7. ABC Incorporation, incorporated in a foreign country, has a net worth of 700 crore. It has two subsidiaries, Company X, whose net worth is 600 crore, and Company Y, whose net worth is 150 crore. Company X and Y would require to follow IND AS from the accounting period commencing on or after 1st April 2016 on the basis that their own net worth or on the basis of net worth of ABC Incorporation. So what they must be, there is one foreign company whose net worth is 700 crore exceed 500 crore. So whether to foreign company IND AS will be applicable? Whether to foreign company IND AS will be applicable? No, to foreign company IND AS is not applicable. Foreign company, how IND AS is applicable? Whether to foreign company, this company's Indian accounting standard rules will be applicable? No, it will not be applicable. So to foreign company, these IND AS rules are not applicable. Understood this point? There is one mistake I think in the question. They have said Company X, whose net worth as on 31st March 2014 is 600 crore. Correct now? But in the answer, they have given Company X is having a net worth of 600 crore at the end of financial year 2015-16. So in the solution they have mentioned 15-16. Correct now? So this you can either correct the question or you can either correct the solution. Can I say we see previous 3 financial year, even though you are writing 13-14, that will be considered 13-14, 14-15 and 15-16 now. So either you correct the question or you correct the solution. So this is one typo mistake. This is one typo mistake. We should ignore it from examination point of view, because in exam question it will be corrected. Understood? Correct. Means can I say X limited and Y limited should for them IND AS will be applicable not on the basis of net worth of foreign company. To them IND AS will be applicable on the basis of net worth of their own financial statement. Now this is the point. So can you see, if we consider net worth of their own financial statement, to X to IND AS will be applicable, to Y IND AS will not be applicable. Understood? This is the answer given. We can read it. Understood? Got this point? Yes, sir. Now let us come to IND AS 37. We have done IND AS 37. We have done the meaning of provision, contingent liabilities and contingent assets. Once a brief revision. So provision means what? Provisions are liability of uncertain amount or timing. Liability means what? Present obligation arising from past event, the settlement of which is expected to result in outflow of resource from the entity. Present obligation means obligation must be probable on reporting date. Probable means chances are more than 50%. We have understood obligation are of two types: legal obligation and constructive obligation. Constructive obligation derived from entities own action. It can be either from past practice and specific statement. Legal obligation arises due to contract or any other act. Correct? Recognition, we have under three conditions. If all the three conditions satisfy, we need to recognize provision. There must be present obligation arising from past event. Outflow of resource which is required to settle the obligation must be probable, and a reliable estimation can be made for the amount or timing of the obligation. We have also done that if the obligation is dependent on future conduct of business, then will not recognize as a provision. Means the obligation should exist independently from the entity's future conduct of business, then only we can recognize provision. Correct. Legal obligation, we have done one important point, that legal obligation arises only when legislation are either enacted or it is virtually certain by the end of reporting period it will be enacted. It will be shortly enacted. Understood? This point have you understood? Correct. Then contingent liability, meaning we have done that contingent liabilities are present obligation arising from past event which cannot be recognized because either outflow of resource is not probable or reliable estimation cannot be made, or they are possible obligations arising from past event. Of course, we will not recognize any contingent liability, it will be only disclosed in the financial statement. Contingent asset, we have done that they are possible asset arising from past event, possible asset arising from past event, all the possible assets. However, if the inflows are virtually certain, then they are not contingent asset, they are assets to be recognized in the financial statement. If the inflows are probable, then it will be considered as contingent asset, it will not be recognized, it will be only disclosed in the notes to account. If the inflows are not probable, then no treatment are required. Then we started measurement of provision. So measurement, we have understood it should be the best estimate of the expenditure which is required to settle the obligation at the end of reporting period. At the end of reporting period means, can I say, it should be discounted amount, means the provision should be the present value of future expenditure if the time value of money is material. If the time value of money is material. However, estimation should be determined based on the management judgment which should be supported either by experience of the past transaction or report of an expert or any additional evidence provided by the event occurring after reporting date. Correct? Means in simple word I will say, estimation from examination point of view will depend upon the information given in the question. Correct? From exam point of view, means we are not supposed to fight for this point in from exam point of view. How to measure? So whenever obligation involve large population, will calculate expected value of obligation which is nothing but weighted average of all possible outcome. Outcome will be given, only we need to apply weighted weight, we can do that. However, when the obligation means when there is a single obligation with two possible outcome, then we'll take what? Most likely outcome. Then provision should be based on most likely outcome. Correct? This much we have done. Then of course the discount rate should be pre-tax. Gain from expected sale of assets should not be considered into account. Then we have done one special point about risk and uncertainties. I think this also you have understood. Risk and uncertainty should be also considered for calculating the best amount of provision. However, risk adjustment can be done in three ways. In three ways, first, either adding to the expected present value of future outflow, or adjusting the estimate of future outflow, or adjusting the discount rate. Reimbursement, then we have done reimbursement. Reimbursement, whenever there is expenditure which is required to settle the obligation, can be reimbursed. Correct? Yeah, is expected to be reimbursed by any third party, and that reimbursement is virtually certain, then we recognize reimbursement as a separate asset in the balance sheet. However, in SOPL, net amount will be shown as a expense. In any case, reimbursement asset should not exceed the amount of provision. However, if the reimbursement is not virtually certain, then will not recognize it as a separate asset. However, if the reimbursement are probable, then it can be disclosed by way of notes. This much we have done. This much we have done. Any doubt? Any doubt? No doubt? No. Next point. Next point is future operating loss. Okay, you are not supposed to read anything till I read. Once you read the interest loss, then you will understand what is given. Then you will not apply your common sense. I always say that if you apply your common sense, all the answer you will have. Common sense as a chartered accountant, huh? Common sense does not like a common people. You need to apply common sense of a chartered accountant. So whenever any questions are, think that you are a chartered accountant and give answer. 90% your answer will be correct. So whenever in exam some case study based questions come, you need, even though you forget the IND AS, your best answer will be correct answer. Whatever you feel, write down. Whatever you feel, write down. Either it will be correct or wrong. That they will decide now. You write down. Correct. And 90% time if you are writing as a chartered accountant, that will be correct. Understood? So future operating losses. We are discussing about future operating losses. So let me take one example. Suppose I have a two business. Means one entity has a two factory. Let us say factory 1, factory 2. Quite possible. Now factory 1 is a profit making and factory 2 is a loss making. Loss making. Correct. Are you able to understand what I am saying? Current year financial statement is a profit making, it is a loss making. Now because it is a loss making, management is expecting that in future 2 year, there will be an estimated loss of 100 crore. Management is expecting that in future there will be an expected loss of 2 crore and therefore we should discontinue it. Therefore we not right now, we should what? We should plan to discontinue it. The planning will take time. But what is the expectation? There will in future there is a loss of what? 100 crore. So should we recognize this as a provision in our balance sheet? It is an expected future loss. So should we recognize it as a provision? It is an expected future operating loss only. Batao. Yes or no? Now when I say ki we have this, can I say when I am saying that we are planning to discontinue factory 2, it does not mean it will affect our going concern. Entity is a going concern only. Entity is a going concern. Huh? I'm just giving clarification. Entity is a going concern. Because once entity become non-going concern, then IND AS will not be applicable. Then we need to do accounting as per some other aspect that we'll discuss in some other classes. Have you understood the question? But should we create provision? Yes or no? Fast. Yes or no? No, no, no. Why? Why? No. It is based on future event, past event. Future event. This is the point, na? Where outflow will come. First condition only not satisfied. Present obligation arising from what? Past event. But it is based on future conduct of business. It is based on future business. And therefore, it is outside the scope of this chapter only, na? It is outside the scope of this chapter. The very simple point. Because in exam, na, they will not ask you this simple question. They will give you a case study. Full story. They will start with one story and then they will end. So it might happen you are emotionally affected with that. Correct now. I am just giving the crux of that case study. See, of course, in this example, it is a future operating loss which is not based on past event, which is based on what? Future event, and therefore IND AS 37 is not applicable. So neither provision nor contingent liability as it is related to what? Future event. Understood? Correct. Let us come to next point, executory contract. Executory contract. Do you know about executory contract? You have done in Contract Act. What is the meaning of executory contract? Yeah. Either both the party have not performed their part of obligation or both the party has performed their obligation to some extent, means partially. Both the party have performed their obligation partially. Either they have not performed or they have performed partially. That is known as executory contract. Means it is not yet executed. Simple word. Correct now. That is known as executory contract. Let me take one example of executory contract. This is very important topic. Executory contract. Suppose A Limited has done one contract with B Limited to purchase to purchase a plant and machinery after 2 years at rupees 10 lakh. Understood? Are you able to understand? So A Limited has done one contract with B Limited to purchase plant and machinery after 2 years at rupees 10 lakh. So can you say the delivery will be received after 2 years? Payment will be also made after 2 years. So whether it is an executory contract. First we need to understand whether it is an executory contract. Whether it is an executory contract. I'm not asking whether IND AS 37 is applicable or not. First I'm asking whether it is an executory contract. Whether both the party have performed their obligation. No, both the party has not performed their obligation. Neither B Limited has delivered the plant and machinery, nor A Limited has paid the amount. So it is a executory contract. So first we need to understand it is an executory contract. So can you see it is an executory contract? Correct. Now they have A Limited has done one contract to pay how much amount? So there is a contractual obligation. Should we recognize it as a liability? Should we recognize it as a liability? Yes or no? Should we recognize it as a liability? How many are saying yes? Anyone saying yes? Everyone saying no? We should not recognize it as a liability. Why? Why? Once again future event. So can I say for executory contract also IND AS 37 is not applicable. Executory contract IND AS 37 is not applicable. Simple one. Correct. That is only given. Means can I say now you don't require my help. Whether you require my help. If you read this, you will be able to understand or not. Correct now. If you have not given fees, don't give me fees. Correct? Correct now. You can understand everything by your own. But I am your support system. I am your support system. So consider me as only as your support system, as a guide. As a guide. But entire effort is yours. You will pass examination because of your effort, not because of my effort. Not because of my effort. So you need to put effort to pass the examination, but you can understand anything. You can understand any point. So executory contract are the contract under which neither party has performed any of its obligation, or both parties have partially performed their obligation to an equal extent. Correct. This standard does not apply to executory contract unless they are onerous. Unless they are onerous. So now I need to explain you what is the onerous contract. What is the meaning of onerous contract? Understood? The next point is onerous contract. Let me change the example. This example you have understood. Now what happened? After 6 months of the contract. Can you see when I say contract, contract means binding. This is a binding contract now. Binding contract means it is a non-cancelable contract. Non-cancelable contract. Can you say all contracts which are enforceable in the eyes of law are non-cancelable? Means when I am saying contract, contract means it is enforceable in the eyes of law or not. What is the meaning of contract? Which can be enforced? Bolna legally. So can you say it is non-cancelable contract? What is the meaning of non-cancelable contract? Non-cancelable contract are those contracts which can be cancelled, but upon payment of penalty. Upon payment of penalty means any contract which can be cancelled without payment of penalty, that are cancelable contract. Understood? Means this contract can be cancelled, but upon payment of penalty. Can I say any contract can be cancelled? Any contract can be cancelled. Right now we have done one contract, we can cancel it. I can cancel. I will not teach, but I need to pay some compensation to you because it is a live exam, na? Are you able to understand? Therefore, I will never cancel. Are you able to understand what I am saying? Correct. So, non-cancelable contract are those contracts which can be cancelled upon payment of penalty. Now, what happened after 6 months? What happened? The A Limited now does not require this machinery due to some reason. Suppose they change the production process. They change the production process. Now, it happened with me also. What happened? These all benches, whatever you are right now observing now. So it was just purchased before COVID-19. This benches just I purchased just before COVID-19, means contract was done and then lockdown happened. Understood now? Lockdown happened. Means till now it was not delivered. Are you able to understand? So now I know after COVID-19 it was COVID-19 for 2 years it was not required only. No face-to-face classes were there. Are you able to understand? So it happens with me also. Same thing. So same thing happened. Change in the production process. Change the production process. And now machinery is not required. Now this machinery is not required. Understood? Are you able to understand? Now this A Limited has two options. Either they will purchase it and then sell it. Are you getting? Let us assume the scrap value of this machinery is nil. Let us assume. It can be 1 lakh rupees also. It can be sold at rupees 1 lakh. ठीक है ना? Suppose the first option is what they can purchase it, and now the machinery is of no use, so they will sell it. Let us assume it cannot be sold in the market. It cannot be sold in the market. Got this point? Second option, they will cancel it. They will cancel the contract, but upon cancellation they need to pay some penalty, and let us assume penalty is 2 lakh. Let us assume penalty is 2 lakh. Understood this point? So can you say in this case what happened? In this contract, the expected benefit from this contract is less than the cost of meeting this contract. Means the cost of fulfilling the contract is more than what expected benefit from this contract. Yes or no? Means when you purchase this machinery, there is no benefit only. The cost of fulfilling the contract is more than what? The expected benefit from the contract. Means whatever contract will do, can you say benefit from the contract will be higher than the cost? Means right now you are paid how much? Whatever fees you are paid, the benefit is more than that now. And therefore you are taking the classes, otherwise you will never taken the classes. So whenever we do the contract, the benefit is always more than the cost. But in this case what happened? The cost is more than what expected benefit, and therefore this contract now become what? Burden. This contract become burden na, and therefore it is known as onerous contract. It is known as onerous contract. Understood this point? So now IND AS 37 says that once executory contract become onerous, now IND AS 37 will be applicable. IND AS 37 will be applicable, and the amount of provision will be equal to the unavoidable cost. Amount of provision will be equal to unavoidable cost, which will be lower of what? This and this. The lower means what is the cost of fulfilling the contract? 5 lakh minus nil, no benefit. So 5 lakh or 2 lakh, whichever is lower. So either they will execute the contract, they will purchase at rupees 5 lakh, or they will pay the penalty, whichever is lower. So A or B, whichever lower, will be the amount of provision. Understood? Have you understood this point? Very simple. So what they want to say, let us read. See, an onerous contract is a contract. Which contract? Can I say executory contract? Because we are discussing about executory contract now. So an onerous contract is an executory contract only. Got this point? In which unavoidable cost of meeting the obligation under the contract exceed the economic benefit expected to be received under it. So whenever unavoidable cost of meeting the obligation is more than expected benefit from that contract, it become onerous contract. Definition is very much clear. If the entity has a contract that is onerous, the present obligation under the contract shall be recognized and measured as a provision. The present obligation under the contract will be recognized as a provision. The cost of fulfilling a contract, I will read after some point. Let us come to the last point first. In this case, the amount of provision is equal to unavoidable cost. In this case, the amount of provision should be equal to unavoidable cost, which is lower of cost of fulfilling the obligation, or any compensation or any penalty arising from failure to fulfill it. Means any penalty payable from, yeah, to exit from the contract, to exit from the contract. Understood? Both will be given in the question. You can find out. Very simple. Now only one doubt will come, sir. What is the meaning of cost of fulfilling the obligation? What is the meaning of cost of fulfilling the obligation? That is defined here. The cost of fulfilling a contract comprise of costs that relate directly to the contract, means only directly related costs. We should take those costs which are incurred, which will be incurred only for fulfilling the contract, means any cost which will be incurred even though you are not fulfilling the contract, they are not cost of fulfilling the contract. Means there are some costs which will be incurred even though you are not fulfilling that contract, that are not, that should not be considered. Means only incremental cost should be considered. Incremental cost means those the cost which will be incurred only for fulfilling that contract. Understood? So that relate directly to the contract. Costs that relate directly to the contract consist of both the incremental cost of fulfilling that contract. Incremental cost. Incremental cost means which are, yeah, which will not be incurred. I don't this one. Which will not be incurred if the contract, if the contract is not fulfilled. Understood this point? Which will not be incurred if the contract is not fulfilled. Understood this point? Correct. For example, direct labor, direct material, etc. And an allocation of directly attributable cost or directly attributable cost means production overhead, we can say, which are specifically incurred for this contract only. Means indirect material, indirect labor, indirect cost can be also considered. For example, the depreciation of an item of PP used in fulfilling that contract, among others. The depreciation which are used for that contract, sorry, the PP which are used for that contract, depreciation of that asset should be also considered. So an allocation of directly attributable cost. Correct. Understood? Means we can see the cost which are unavoidable. Unavoidable cost. The keyword is what? Unavoidable cost of meeting the obligation under the contract are only those costs that are incremental to the performance of the contract. Incremental, you understood? Do not include allocated costs that will be incurred regardless of whether the entity fulfill the contract or not. Means it will not include those costs which will be incurred even though contract is not fulfilled. We should ignore that, and cannot be avoided by the entity's future actions. Cannot be avoided by the entity's future actions. Understood? Correct. So this become important for writing in exam. This become what? Onerous contract. In simple word, I will say from exam point of view, whenever a contract become onerous, we need to recognize it as a provision which will be lower of these two. With lower of these two means what? Cost of fulfilling the obligation or any compensation or penalty payable on failure to fulfill it. Got this point? Let me take some questions. Very simple question given is that all questions are not required to be read by me. You can also read by your own. But only for your understanding purpose I am taking some questions. Question number 12. X Metal Limited has entered into a non-cancelable contract with Y Limited to purchase 10,000 units of raw material at rupees 50 per unit at a contract price of 5 lakh. So 5 lakh is the contract price. As per terms of contract, X Metal Limited would have to pay 60,000 to exit the said contract. This is penalty. X Metal Limited has discontinued manufacturing the product that would use the said raw material. Now they have discontinued the operation only. For that purpose, X Metal Limited has identified a third party to whom it can sell the said raw material at rupees 45 per unit, means it can be sold at rupees 45 per unit. How should X Limited account for the transaction in the books of account in respect of the above contract? So whether it is an executory contract, yes. First you define what executory contract, then say it is an onerous contract. So IND AS 37 will be applicable to onerous contract, which will the amount of provision will be equal to what? Lower of point number A is what? Cost of fulfilling. The cost of fulfilling is what? 5 lakh minus 4 lakh 50,000, because we will recover 4 lakh 50,000 to 50,000, or penalty. Penalty is what? 60,000, whichever is lower. So you need to create a provision of what? 50,000. So you need to create a provision of 50,000. Understood? Super easy question. Yes, this type of questions are super easy, na? And therefore they will not ask this type of question. Correct? Don't expect this type of question. Means can be asked also. Now with MCQ form, MCQ type of question, this type of question are very can be asked. For 1 mark question, very good question. Now one question was asked in exam. The similar example I have taken, this question. Similar example I have already taken. That they purchase what? One machine. So this you can read. Okay, whatever question I am doing now, just give circle. Or what you can do in front of this concept, write down. I have done which question? Question number? First question. What was the question number? Hi. 12. First I have done question number 2. Write down you also. Question number 12. Then I am doing question number 28. Write down. Or keep circle and write down here onerous contract. In front of the question onerous contract, the topic. So you will understand these questions we have done in the class. Balance question you are supposed to read by your own. So all the questions I will not read now. Then what you will do? If I will read all the questions, correct now. So this question, this example already I have taken in class. Correct now. This you can read by your own now. You will be able to understand. Now one good question was asked, was given. I mean this is actually one illustrative question. Let me read first because it is a very big question. Let me read. Very simple, but HBCL manufacture heavy equipment for construction industry. An order for supply of 90 equipment was received for ABIL. How many equipment? 90. The unit price of the equipment was agreed at 190 lakh each. 190 lakh each. 64 equipment was supplied during the year 2001-2002. So how much already supplied? Means this is partially done. Means this is a contract which is partially performed. Then also executory only na. So out of 90, how much supplied? How much balance left? 26. 26. And the balance quantity remaining to be supplied as on 31st March 2002. HBCL has 5 equipment in the inventory. Means out of this 26, how much is already in the inventory? Means how much we need to produce? 21 minutes to produce. Are you able to understand what I am saying? HBCL consider that contract was onerous. Thank you very much. It is given in the question, it is an onerous contract. Therefore, the NRV of the inventory has been taken as value of inventory as on 31st March 2002. This is to IND AS 2. Of course, will take cost price or NRV whichever is lower. So it is quite possible NRV is lower than what? Cost price, and therefore they have taken NRV. Are you able to understand? Yes, sir. The management of HBCL contend that costs incurred toward admin overhead, finance charges, and research and development expenses, sales overhead, headquarter expenditure are considered as a period cost and hence not considered for creation of provision. Correct only, because these are not incremental costs. These are period costs. Period cost means it will be incurred even though we do not produce this equipment. This all now. Admin expense, finance charges, research and development expenses. This will be incurred even though you are not fulfilling the contract. So management is correct only. Management is correct. and the same have not been included in the computation of unavoidable cost. Thank you very much. This question is what has been designed from student point of view to understand which topic onerous contract. Understood? The management of HBCL has submitted the details of cost that have been considered for the creation of provision towards onerous contract. So they have given some detail of cost which have been considered for creation of provision. Material cost, of course, it will be included. Correct. Labor cost, it will be also included, and material overhead, this will be also included. This will be also included. You can read whatever is given. Accordingly, the provision has been considered. Provision has been made considering the above cost only. The value of provision created for 21. देखो 21 only. 21 na. 26 minus 5. Remaining equipment to be produced is as per the working shown below. So the cost of production, which include material cost, labor cost, material overhead, is 199. Selling price is 190. Means what is the cost of fulfilling the contract? 9. Therefore 9 into 21, 189. So 189 become 189 lakhs. This is 189 lakhs. So we should create a provision of what? 189 lakhs. They have not given any information about penalty. Means it is quite possible they cannot cancel the contract. They cannot cancel the contract, therefore there is no penalty wala point. Correct now. Whether the company's accounting treatment for the cost of creation of provision towards onerous contract is in line with the provision of IND AS 37. Now they ask whether it is correct. So it means you will write on entire para whatever is given in IND AS book. Now you can write yes, it is in line. You will get marks. So it means you should write down from here to here all the point, executory contract, onerous contract, then all these point, then at the end this point, then explain yes, it is in line with IND AS 37. Therefore, okay, correct. So can you see it was an illustrative question? Illustrative, but this type of question are dangerous because in this you will write down properly. Whenever a CA student need to write now, they can't write properly. They can solve it, but writing is very weak because I am also CA na. We all are bad in what? Writing. We are very good in what? Convincing others. We are very good in convincing others, but writing not good. We are not. We do always copy paste. Previous year, financial year, current year, copy paste na. Whether we write anything, we don't write anything. We are not good in writing. So writing you need to build. How to write in exam, that is important. Understood? Now you can read it. Same thing is given. Chalega? So onerous contract also you have understood. Chalega? Yes, sir. Correct. Now let us come to some small point changes in provision. Can you say whatever provision you have created in one reporting date, next reporting date, it requires reassessment. Can you say amount of provision might change because the circumstances, condition has been changed. Therefore, the amount of provisions will be reassessed as per the current best estimate. As per the current best estimate, and therefore it might be increased or it might be decreased. It is quite possible that now provision is no longer required because present obligation might become possible obligation, or possible obligation might become remote obligation. Quite possible now. It is quite possible provision is no longer required. You need to reverse the amount of provision. It means every year we need to do reassessment of the provision till it is actually settled. Till it is actually settled. The provision must be reviewed at each reporting date and adjusted to reflect the best current estimate. If the provision is no longer required as it is not probable, amount of provision must be reversed. Understood? Correct. Now, next point, try to understand. I said, suppose this is the reporting date and this is the amount payable after 3 years. So we will find out present value. Present value you can calculate. Suppose 10 lakh. What is the 10% present value factor? 0.751 na? 10% 0.751. You know how to calculate? Calculator should be with you. 0.751 it is coming. So you can find out 7 lakh 51,000. 7 lakh 50,000. Means on this date what journal entry you have done? PL account debit to provision na. PL account debit to provision 7 lakh 51,000. But after 3 years how much you will pay? 10 lakh. So the difference is what? Difference should be considered as what? Amount I am not asking. Amount you can calculate. So this difference 10 lakh minus 7 lakh 51,000. This will be considered as what? Means whenever you discount, so the difference between future value and present value is what? Interest element. Is the interest element now. So what IND AS 37 says that you need to unwind the amount of provision to measure the carrying amount at each reporting date. Means can you see, you need to add interest element every year. Add interest element na. So if you will now compound it by interest, then only it will become 10 lakh. So this amount is known as borrowing cost and it will be charged to PL as an expense. It will be charged to PL as an expense. This process is known as unwinding of the amount of provision. Unwinding, a new term in your life. Till now we say either discounting or compounding. Discounting means deduct interest. Compounding means add interest. Discounting means what? Deduct interest. Compounding means what? Add interest. Normally we say compounding, but IND AS 37 has given a new term, unwinding of provisional amount. Unwinding means add interest. Unwinding means add interest. So when discounting is used, the carrying amount of provision increases every year. Carrying amount of provision increases every year. The increased amount is treated as borrowing cost. Borrowing cost means interest cost. Borrowing cost means interest cost. And it will be charged to PL as a expense. Understood? Have you understood? Yes, sir. Sir, take one example. Let us take one question. Question 10. X Telecom Limited has an income tax litigation pending before appellate authority. Legal advisor opinion is that X Telecom Limited will lose the case and the estimated liability is 1 crore may arise in 2 years. The liability is recognized on a discounted basis. The discount rate at which liability has been discounted is 10% and it is assumed that discount rate does not change over the period of 2 years. How should X Limited calculate the amount of borrowing cost? So they have asked you calculate the amount of borrowing cost. It means what will do? We are doing question number 10. So this is y0, this is y1 and this is y2. This amount is what? 1 crore. But we want to recognize provision as on this date. So this will be 1 crore multiplied by how much? 0.826. So this will be 82 lakh 60,000. So are you able to understand what I am saying? Correct. So at year end 1 they have not given the date now. They have not given date. Let us assume, only for understanding, let us assume this is 31st March 2023. This I have assumed for passing journal entry. Suppose they have asked journal entry. So 31st March 2023. What journal entry will do? Profit and loss account, debit to provision for, they have asked tax na, income tax na, is income tax question na, income tax litigation. So provision for income tax you can add on. How much? 82 lakh 60,000. Then next year 31st March 2024 we recognize borrowing cost. Borrowing cost na, transfer to PL account debit to what? Provision for income tax. We will add 10% interest. 10% interest will be how much? 8,26,000. 8,26,000. Then 31st March 2025. Once again we'll do borrowing cost. profit and loss account debit to what? Provision for what? Income tax. In last year, always interest should be calculated as a balancing figure. I think you have also done the same thing in your CA Inter FM also. So last year, due to approximation, we should calculate interest as a balancing figure. So it should be 1 lakh, provision amount should be 1 lakh. This plus this is how much? We will do 1 crore minus how much? How much? You have calculated 9 lakh 14,000. 9 lakh 14,000. Understood? Correct now? This is how much? 9 lakh 90 lakh 86,000. So this is the journal entry. So this is the amount of borrowing cost. This is the amount of borrowing cost. Simple. Simple. Any doubt? Correct now. But if we read the answer now, in answer what they have given, check करेंगे. What they have done actually in answer means you can understand the answer, but when you will match with my solution, it will not match. In answer what they have done, they have calculated present value factor at this date also. So this becomes 0.909. So this amount is coming 90 lakh 90,000. So this difference is how much? This difference is coming how much? 90 lakh 90,000 minus 82 lakh 60,000, how much? 8 lakh 30,000. This become interest of first year. Now 1 crore minus 90 lakh 90,000, how much? 9 lakh 10,000. So this become interest of second year. So in solution they have done in this way, but that solution is also correct. This solution is also correct. Whenever we use discounting factor, there will be some approximation about a decimal, and because of that reason, answer of student might different. Means one student answer cannot match with other student answer. So both are correct. So don't be unhappy because of this reason. Both answers are correct. Chalega? Yes, sir. So this is known as unwinding of provision. Okay, sir. Correct. Yes. Write on question number. Which question we have done? 10. Next point is use of provision. Use of provision. Now the question is that if suppose the provision is no longer required, if the provision is no longer required, suppose we created provision in question number 10 and after some time we felt that it is no longer required. So can we use that amount of provision for some other purpose? Can we use that amount of provision for some other contingencies? No, we cannot use that amount of provision for some other contingencies. It needs to be always reversed. It needs to be always reversed. If no longer required, reverse it. You cannot use that amount of provision for some other purpose. Clarification has been given. Understood point, but correct. The provision should be used only for the expenditure for which it was originally recognized. In other words, it cannot be used for any other purpose. If no longer required, reverse it. Got this point? Now accounting treatment. The accounting treatment of bachpan se you are doing. If related to expense, means if you are creating provision for expected expense, then what journal entry? Expense account debit to provision, and then provision account debit for reverse of what journal entry? Provision account debit to expense. So for creation, expense account debit to provision; for reversal, provision account debit to expense. But sometime what happens? Whatever provision you are creating that is related to the acquisition or construction of asset, that is related to acquisition and construction of asset, then can I say it should be capitalized to the cost price of asset? If it is related to acquisition and construction of asset, then it should be capitalized to the cost price of asset. Then journal entry will what? Asset account debit to provision, and on reversal, provision account debit to asset. Understood? Have you understood? Can I say this too you have done before also? Can you give me any example of this related to asset? Can you give me some example of this related to asset? Have you understood what I am asking? This too you have understood related to expense? This you have understood? Can you give me some example related to the acquisition and construction of asset? Very good. It means you have done AS10. Excellent. Excellent. Dismantling cost, but I think everyone have not understood dismantling cost. If you have done AS10, then it means you know about this. Just write down refer. I will teach you this point in IND AS 16 in detail. That time we will discuss about dismantling cost. That time we'll discuss about dismantling cost. Very good, means already I am convinced with him. Means he knows. So I will not discuss, because that point I will discuss under IND AS 16. Coming soon in your life, just write down refer IND AS 16. Only one example is there. Only one example is there that you have already said. So I don't have any scope to teach now. Correct now. So we refer what? IND AS 16. Chalo. This also done. Now the last point of this chapter is restructuring. I say there are four special points. One, we have done reimbursement, that is expected. Then future operating loss, that is good point, but question may or may not come. Then we have done onerous contract, expected. Then restructuring, expected. So normally from these three topics, reimbursement, onerous contract, restructuring, we expect question at CA final level. We expect question at CA final level. Restructuring. What do you mean by restructuring? Restructure. Can you say amalgamation? Whatever you have done in CA Inter is also an example of restructuring. Restructuring means what? Any program, any action of the entity which will change the scope of business, which will materially change the scope of business. Suddenly you will do some activity which will change the entire scope of business. For example, if I shift my business location from here to another place, it will change the scope of business. Correct now. So any activity or any program which will change materially the scope of business, that is known as what? Restructuring. But without entering into liquidation. Means with restructuring, going concern is not inappropriate. Going concern will remain valid. Means we are not saying liquidation of entity. Entity will remain going concern only. So therefore, going concern, GC means what? Going concern. Write down full only. Going concern will not be affected. Correct. So it is a program which materially changes the scope of business. For example, sale of a division is sale of one component of the entity, sale of one business of the entity, not entire business, sale of one business. For example, I decided to close down my CA foundation business. It means we are going concern, but we do not want to continue CA foundation. Correct. Termination of a division. We want to terminate one component, or closing of a business location or relocation to some other location. Understood? These are some examples of what? Restructuring. These are some examples of restructuring. Now the question is that, suppose you decided to restructure. Suppose, let us take one example. Suppose we decided to close down one business, one factory. Correct? So can you say because of that closure, we need to incur some cost of restructuring? The cost will be actually incurred on actual closure. But right now we have decided, but actual closure will be done immediately or after some time. Means of course it may take 2 years to actually close down, because we may have some contract we need to first fulfill now. Are you able to understand what I am saying? So it might take 2 years for actual closure. We have decided right now, but closure will take after 2 years. And whenever there is an actual closure, there will be some cost of restructuring. For example, whatever employee who will be terminated because you close down the factory, you need to pay compensation to them. You need to pay compensation. So that compensation to employee is directly related to restructuring. Because of restructuring, you need to pay some compensation. Now the question arises, when you have decided whether any obligation arises, and if obligation arises, should we create provision? There are two questions. Have you understood this point? So the point is that suppose this is the date when you have decided. Correct? This is the date when you have decided to close down, but actual closure, let us assume it will take after 2 years. Let us assume. So cost, restructuring cost will be actually incurred at this point of time. Should we apply IND AS 37 on this date, and should we create provision for restructuring cost on this date? Have you understood the topic? Topic have you understood first? Topic, we are discussing what? Very important topic, restructuring. Correct. So my question to you all, once I have decided to close down, should we create any provision for restructuring? What do you think? No. Why? Future conduct of business. You are saying future. So then so everything is future only, if you are saying. Just try to understand. This is based on future event, but it is not dependent on future conduct of business. We have already decided, na? We have already decided. Means just try to understand. If you are saying it is based on future event, so there are two things. Obligation arises from past event, which is dependent on happening or non-happening of uncertain future event. So I am saying whether obligation arises. First you think whether obligation arises from past event. Yes, you have decided. I don't know. Right now I have not given any answer. You are saying it is based on future event. So I say it is, of course, can I say the obligation will be settled based on uncertain future event. Right now we don't know this point. This is why I say expected. Let us assume. But on this date, this is uncertain, na? Are you able to understand what I am saying? But you have decided. You have decided. Should we create provision? Should we create provision? Are you able to? Let me give one example. Let me give an example. Suppose I decided to marry one girl. I propose a girl. So should I record all future expenditure of marriage? Why not? Can I say I have proposed, till now no confirmation received? Means can I say till now no commitment? No commitment, na? So what IND AS 37 says that first find out whether entity is committed to this proposal. It is only a proposal right now. You have decided, it does not become what? Commitment. There is no commitment right now. So what IND AS 37 says that just find out a point of time when entity become committed to this. Once entity become committed, then IND AS 37 is applicable. IND AS 37 is applicable, and at this point of time you need to recognize what provision. Understood? Correct. So how we'll understand that entity is committed? So IND AS 37 has given two conditions, A or B. If any one condition satisfied, sorry, my mistake, A and B, if both the conditions are satisfied, then it means entity is committed. If both the conditions are satisfied, it means entity is committed. Just try to understand, everyone. I propose a girl, understood, and acceptance received. I can give this type of example now. Huh? Correct? I am married. I will not propose anyone now. I am legally committed now. So I propose a girl and commitment, and suppose confirmation received. And I have made announcement in Facebook that from single I become mingle. Can I say announcement means what? I am committed. Otherwise, so I will never announce. Yes or no? So can I say once I announce, it means I am committed. Otherwise, so I will never announce. Correct? Because I can propose another girl also, no? But once I announce, can I propose anyone? No. It means, can I say once I announce, it gives an indication that you are committed. It gives an indication that you not, I am committed. Are you able to understand? So what IND AS 37 says that if the entity has made a detailed plan for restructuring, correct? and either implemented such plan or has made announcement of such plan announcement of such plan, it means they are committed and there is a constructive obligation, and therefore we should recognize what? Provision. So if these two conditions satisfied, so it gives an indication that yes, there is a constructive obligation, and because of that constructive obligation we should recognize provision. Understood? Have you understood? So entity has made a detailed formal plan, and entity has either implemented such plan, has done some activity to implement such plan, or has made announcement of such plan to the person who are affected by it. Understood? Correct? Have you understood? So what they want to? So let us read. A provision for restructuring cost is required when recognition criteria of provisions are satisfied. Recognition criteria means that three conditions. There must be present obligation arising from past event. Outflow of resource must be probable and amount can be estimated. A constructive obligation for restructuring arises when entity has a detailed formal plan for restructuring. Entity has a detailed formal plan. Can you say when you will do detailed plan? When you are committed, otherwise you will never do detailed plan. Detailed plan. Are you getting? When you are committed, then only you will go for detailed plan. Otherwise, you will not go for detailed plan. Correct? And entity has started to implement such plan. For example, we have given one advertisement in the newspaper that we want to sell our business. So can I say it is a indication that you have started one activity to implement such plan? Implement. So it shows your commitment. It shows your commitment. Or announce the main features of restructuring plan to those affected by it, means you have called all the members of your company and you have announced it to the shareholder, to the creditor, to the employee that we have decided to discontinue this business. It means you have committed to that plan. Correct? So this too is very very important from exam point of view. Understood? So once these two conditions satisfied, IND AS 37 applicable and you can create a provision. Now what will be the amount of provision, measurement of provision? Same thing. A restructuring provision should include only the direct expenditure arising from restructuring. Direct expenditure arising from restructuring means once again incremental cost. Which are those that are both necessary entailed by the restructuring, means which is only because of restructuring, and not associated with ongoing activities of the entity, means it should not include any expenditure which is related to ongoing activities of the entity. Correct? Means it will not include admin expense, etc. Means simple word, expenditure expenses which will be incurred which are avoidable, which you can avoid, which you can't avoid even though restructuring was not done, that will not be considered. Are you able to understand? See, this happens only because of restructuring. So any expenses which are related to ongoing activities of the entity should not be considered. A restructuring provision does not include costs such as retraining or relocating continuing staff, relocation cost, retraining cost, that will not be considered. Marketing cost, that will not be considered. Investment in new system and distribution network. Why? Because these are related to the future conduct of business. So this expenditure relate to the future conduct of business and therefore should not be considered. Correct. Future operating loss up to the date of restructuring. Are not included in provision unless they relate to what? Onerous contract. All points we have understood. Correct. Let me take one good question based on this. Come to question number 15. 17. U Limited is a large conglomerate with a number of subsidiaries. It is preparing consolidated financial statement as on 31st March 2018 as per the notified IND AS. Can you say all IND AS will be applicable to consolidated as well as separate financial statement? Correct? So when I say consolidated, so consolidated financial statement is the financial statement of group entity. So to entire group entity, all the IND AS will be applicable. Got this point? The financial statement are due to be authorized for issue on 15th May. This is the date of approval. So once again, this is linked with IND AS 10, AS4 coming soon. But you know AS4. It is taking your assistance for some transactions that have taken place in some of its subsidiaries during the year. G Limited is a wholly owned subsidiary of U Limited engaged in the management consultancy services. On 31st Jan 2018, means during the year, the board of directors of U Limited decided to discontinue the business of G Limited from 30th April 2018. They made a public announcement of their decision on 15th Feb 2018 before 31st March. Constructive obligation arises on 31st March or not? Yes. And therefore IND AS 37 will be applicable. Understood this point? G Limited does not have many assets or liability. It is estimated that outstanding trade receivable and payable would be settled by 31st May 2018. U Limited collect any amount still owed by G Limited customer after 31st May 2018. They have offered the employee of G Limited termination payment or alternative employment opportunity. Here is a collection of debtor. A payment to creditor is related to ongoing activities. So any amount which is less collected or more paid should not be considered because that is related to what? Ongoing activities. So this para is related to ongoing activities, therefore should not be considered. Now to employ of G Limited, they have given two options, either termination option or alternative employment opportunities. Either you go out of the company or take some alternative job. Following are the sum of the details relating to G Limited on the date of public announcement. On the date of public announcement means 15 Feb 2018. It is estimated by G Limited that it would have to pay 540 lakh as termination payment to the employee, and the cost for relocation of employee would remain within the group would be 60 lakh. Means what they want to say, let me draw. We are doing question number 17 and this is 31st March 2018 na? And this is 15 Feb 2018. So termination cost and relocation cost. Termination cost how much given? 540 lakh, and this 60 lakh. Relocation cost? Yes sir. Then what they have given? The actual termination payment totaling rupees 520 lakh were made on 15 May 2018. As per the latest estimate made by 15 May 2018, the total relocation cost will be 63 lakh. But on 15 May what happened? 15th May. Actual cost is what? 520 and estimated relocation cost is how much? 63. 15 May is the date of approval. 15 May is the date of approval na? It is given 15 May 2018 is the date of approval. G Limited had taken a property on operating lease which was expiring on 31st March 2022. The present value of future lease rental using an appropriate discount rate is 430 lakh and on 15 May 2018 G Limited made a payment to the lessor of 410 lakh in return for the early termination of lease. But now this point is actually not relevant. Just write down, not relevant due to IND AS 116. This question was created before introduction of IND AS 116. This question was created before introduction of IND AS 116. Understand what I am saying? Before IND AS 116 there was one IND AS 17 which is now deleted. IND AS 17 was same to same AS 19 whatever you have done. AS 19 if you remember thoda sa I can say AS 19 used to say thoda sa I am just giving thoda sa hint because this point is will be relevant in every chapter. As per AS 19 if you remember we need to do accounting in the books of lessee and lessor. You remember lessee lessor? Remember AS 19 na? Then only I will teach, otherwise I will defer it. Correct na? So AS 19 used to say we need to do accounting in the books of lessee and lessor. And for accounting treatment it can be operating lease or finance lease. It can be operating lease or finance lease. This was the case. Now what is operating lease, what is finance lease? If you know, very good. If you don't know, then also very good. Okay. Understood? Now IND AS 116 what they says in the books of lessee, in the books of lessor, in the books of lessor so there can be operating lease or finance lease. Means it is same to same, I will say 90% same as AS 19. But in the books of lessee now there is no concept of operating lease or finance lease. There is no concept of operating lease or finance lease. Understood? So all lease means only lease. Correct na? It cannot be operating, it cannot be finance in the books of lessee. And what IND AS 116 says that whatever lease is there, we need to create, we need to recognize one ROU asset to lease liability. We need to recognize one ROU asset and lease liability. Correct? Means whatever asset has been received on lease, that will be known as ROU asset. ROU asset means right of use asset. Right of use asset. So the right will be recognized as an asset. Why? Detailed discussion will be done under IND AS 116. So can you see in the books of lessee now there is no concept of operating lease or finance lease. Means already we have recognized one liability. If you have already recognized liability, then again so you will not recognize the liability na. And therefore this point is not valid. And therefore I will say this point is not valid. So ignore this. Correct. But what happened recently in one RTP they have given same to same question. Means बताओ क्या करें? This question was created before IND AS 116, so they should change it na. अरे बोलना रे. Now what happened if I will change or if I will delete this point from my question bank and now this question comes in exam, you will suffer. So what I am saying, it is not relevant due to IND AS 116. From my point of view, it will not come in exam. If come, to be smart to answer. You should be smart enough to answer it. You should be smart enough to answer it. Correct now. So now for this point, I will say IND AS 37 is not applicable. G Limited has taken property on operating lease. This is not possible only. G Limited is a lessee, and in the books of lessee there is no operating lease concept. So this point become invalid now. Are you getting? So when these questions come out, you write down for G Limited it cannot be operating lease. Please check the question first. Don't write in this way. Just write down this point. For this point will not create any provision. Only ignore this point. Okay? So I am not deleting this point. Intensely I have not deleted. Understood why I have not deleted? Because same to same question might come. Okay? Then loss after tax of G Limited for the year ended 31st March 2018 is 400 lakh. Like up to 31st March 2018, what was the loss? Up to this, what is the loss? What you will do about this? What you will do about this loss? Whether for this loss IND AS 37 applicable. This is the loss of current year, na? Whether for this loss IND AS 37 applicable. This will be recognized. IND AS 37 will not be applicable now. So this is bakwas point. 1 second to confuse you. Correct. 1 second. Again. G Limited made a future operating loss totaling rupees 60 lakh till 30th April 2018. 30th April was the actual closure date. So 30th April was the actual closure date. So this becomes loss from this date to this date is how much? 60 lakh. What you will do about this? Should we recognize the provision for this? So for future operating loss, no provision. For future operating loss, no provision unless the contract is onerous. So they have not given anything about onerous. How should U Limited present a decision to discontinue the business in its consolidated statement of comprehensive income? In consolidated statement of comprehensive income, this is nothing but a statement of PL. This question has taken from which book? International book. They don't have time to change the question also. So this is nothing but SOPL. Huh? What are the provisions that a company is required to make as per IND AS 37? I will say good quality of question. This is a good quality from CA final point. Easy. Solution is very easy, but question is very good. Normally what happens, we don't understand what they are asking in exam, because in exam, in your mind, IND AS 37 is not there. Entire FR is revolving. Now first you need to go to IND AS 37 and then write now. Then this question become interesting. So now the very easy, batao. Should we create a provision for termination compensation? Should we create a provision for termination compensation? They have already given that announcement has been done. So there is a constructive obligation. Should we create a provision for termination compensation? Yes or no? Yes. What about 540 lakh, 520 lakh? 520. Why? Because can I say this was known before approval of financial statement. The best estimate is 520 lakh, not 540 lakh. Very good. So 520 lakh is correct. If you are not able to understand why 520 lakh, next chapter is IND AS 10 only. We'll discuss in detail about 520 lakh. Chalega? Okay. Now, should we create any provision for relocation cost? No. Very good. Excellent. Means excellent. Depends upon what future conduct of business, whether employee will relocate or not. It depends upon future conduct of business. Therefore, no provision required. For this also no provision required. It means the amount of provision will be only 520 lakh. So we'll change the answer also. Because in the answer now, they have given this point you delete. Not relevant now. Not relevant now. And you just delete this 410 lakh. So your answer will be 520 lakh. Understood. Restructuring also done. Correct. You have question number 17. You can write down refer question number 17. So chapter over. Scope is left. Scope is what? What do you mean by scope? See what is covered, what is not covered in this chapter. Normally this is the first point of any IND AS, but I do at the end. Because initially you can't understand this now. Now you can understand each and every point. See what is not covered, that is given the scope. So IND AS 37 is not applicable to executory contract unless onerous. Now you have understood this. It is not applicable to executory contract unless onerous. Financial instrument. Financial instrument means what? You can write down debtor, investment, etc. or what? Financial asset. Because for them, is any reduction in the value of asset is not covered in this chapter because they are not liability. So any allowance of bad and doubtful debt is not covered in this chapter. That is covered in separate chapter coming soon, IND AS 109. Income tax. Income tax is totally covered in a specific IND AS 12. Therefore, it is outside the scope of what? IND AS 37. Means if any provision is covered under some other IND AS, so of course IND AS 37 is not applicable. Correct. Employee benefit. Provision for employee benefit is covered under IND AS 19 specifically. So will be outside the scope of this chapter. Means that will meet a definition of provision but cover there. It is not covered in this chapter. Insurance contract. Insurance contract means if suppose any company is doing insurance business, so they need to pay claims. So for that, whether provision is required or not, that is covered under IND AS 104. But good point is that this is not in a syllabus. This chapter is not in syllabus. IND AS 104 is not in our syllabus. Why? Because IND AS 117 is coming soon. IND AS 117 is in under drafting stage, that is related to insurance company. Once IND AS 117 will come, then IND AS will be applicable to insurance company, and then that will be part of your syllabus. So become CA as soon as possible. Otherwise, that will be also applicable to you insurance company. Okay? Then last point, contingent consideration arising in case of business combination. Whatever we do in business combination, that is covered under IND AS 103. So it is outside the scope of this chapter. Now this might be important for MCQs. Previously I say Pallo, because they will not ask theory question. Now it become important. Now each point become important. Got this point? Disclosure. Disclosure for each class of provision. A brief description of the nature of obligation. Write down the nature of obligation. An indication of uncertainties about the amount or timing of those outflows. So just give a indication of uncertainties. The amount of any expected reimbursement. Any reimbursement is there, that you should disclose. What is the amount of expected reimbursement? Stating the amount of any asset that has been recognized for that expected reimbursement. If you have recognized that asset, write down how much asset you have recognized. For each class of contingent liability, a brief description is required. Where practicable, an estimate of its financial effect means it can be estimated, it may not be estimated. If estimated, write down the amount of estimation. An indication of uncertainties relating to the amount or timing of an outflow. Here also, if there is any indication of uncertainty, that also mentioned. The possibility of any reimbursement. If there is any possibility of reimbursement, that also you mention. For each class of contingent asset, a brief description is required. An estimate of their financial effect wherever practicable. Means if it is practicable to estimate, then only disclose. If impracticable to estimate, then only disclose the fact. So where any of the above information is not disclosed because it is not practicable to do so, the fact should be stated that we are not able to estimate the amount. We are not able to estimate the amount. Then chapter over. Difference between IND AS 37 and AS 29. I don't know whether it is relevant for exam or not. Okay? Rare chances. I will say very rare chances. Means it is remote chances that they will create a question from this. So read it. Correct now. It will not take much time. 4 points are there. So constructive obligation. IND AS 37 deals. Already I have informed you. But AS 29 was silent. Discount allowed when time value of money is material, but this is not permitted under AS 29. But there is one exception where present value can be done. AS 29 has given one exception when present value is required. Only one exception, only one circumstance. Do you know this? You don't know. So I will teach you this point in IND AS IND AS 16 only. I will give you this point in IND AS 16. AS 29 has given one exception where discounting is allowed. Contingent asset require disclosure in financial statement, but AS 29 says that disclose in the report of approving authority. Already I have informed you. Onerous contract. What IND AS 37 says that it requires recognition of impairment loss on the asset. Now impairment loss will be covered under IND AS 36 coming soon. Now suppose there is an onerous contract and there is one asset which is dedicated for that contract, and for that asset IND AS 36 is applicable. So what IND AS 37 says that first calculate impairment loss as per IND AS 36, then calculate what? Provision. So first you need to calculate impairment loss as per IND AS 36, and for the balance amount you should create what? Provision. Correct? So it requires recognition of impairment loss on the asset dedicated to such contract before any provision is created as per IND AS 37. So before creating any provision, apply IND AS 36. Correct? But because you don't know IND AS 36, therefore we are not discussing right now. Automatically you will understand this point when we will do IND AS 36. This para is totally silent in AS 29. Done. Chapter over. Chapter over. Now, can I say, can you do the balance question by your own? I will take some question. Come to question 20. Marico has an obligation to restore environmental damage in the area surrounding his factory. I like this question personally. I like this question. Means this question is drafted very good. Means this cover all the points of IND AS 37. Expert advice indicate that restoration will be carried out in two distinct phases. The first phase requiring expenditure of 2 million to remove the contaminated soil from the area, and the second phase commencing 3 years later from the end of first phase to replant the area with suitable tree and vegetation. Up to this, have you understood? There will be two future expenditure. One will be after 1 year and one will be after 3 years of that end of 1 year. Understood? The estimated cost of replanting is 3.5 million. Marico uses a cost of capital before taxation 10%. So this is pre-tax discount rate. We want pre-tax or after tax? We want pre-tax only. Thank you very much. And the expenditure where incurred will attract tax relief at the company marginal tax rate of 30%. But what you will do about 30%? 30% they have given tax rate. Should we consider tax rate for creation of provision? Provision should be before tax, after tax. Okay, this is bakwas point. I said now in exam 30% will be given. Abhi to I am with you and this chapter we are doing. You are relaxed, but in exam this 30% can be dangerous. You say whenever some information is given, we use it na. We use it. So solution become wrong. Correct. Marico has not recognized any provision for such costs in the past, and today date is 31st March 2002. Means this is the current date. The first phase of the cleanup will commence in a few months time and will be completed on 31st March 2003, when the first payment of 2 million will be made. Phase 2 will be paid 3 years later from the end of first phase. Calculate the amount of provision. Can you calculate right now? Don't see the solution, you only calculate. I just want to see whether you are calculating correct or not. You know how to calculate present value? So apply 10% rate and calculate it. I just want whether you are doing correct calculation or not. Please bring calculator, bring one fresh notebook. To a CA final student, I should not say this point. Bring calculator, bring a fresh notebook. Correct now, and write whatever I am writing. Write whatever I am writing because that will be useful for revision purpose. Okay? Understood? Done? Calculated everyone? Arey. बताओ. We are doing which question? Question number 20. So we are creating provision on 31st March 2002. So first year end will be 31st March 2003. Then 4, then 5, then 6. What is the expenditure? First means 2 million. 2 million means 20 lakh, na? 2 million means 20 lakh. This will be incurred in the on which date? On 31st March 2003. Then this year nil, and this year how much? 3 point. So it will be 35 lakh. Understood? Now you first find out present value factor. This 0.909, 0.826, 0.751, 0.683. Now calculate. This will be the amount of provision. Can you give me what is the amount of provision? Full. You are giving full? Total. Can you give me the total? How much? 42,85,000. This becomes the amount of provision. This is what I am saying. If you are not reading the question carefully now, so this you may do mistake. So reading of question is more important. Understanding of question is more important than solution. Normally what happens, we misunderstood the fact of the question and therefore we are not able to write correct answer. Got this point? Yes sir. 42 lakh 8,000. 42 lakh 8,000. This is correct? Okay sir. What is the answer given? Same answer is given. Chalega. I'm just giving some question. Do it by round 21. There are some questions which I will highlight. That is must do. But entire question need to be done by you only, huh? Correct. But first do this much. Okay. Because in this question you may have some doubt. If the doubt is coming, then I will help you in that doubt. Chalega. $33. Come to this 34 now. This I will do. XYZ Limited offer a 6-month warranty. 6-month warranty on a small to medium size equipment which can be put to use by the customer with no installation support. Okay. The warranty comes with the equipment and the customer cannot purchase it separately. This equipment is typically sold at a gross margin of 40%. So this equipment is sold at a gross profit of 40%. XYZ Limited has made a provision of rupees 30,000 during the year ended 31st March 2002, which is approximately 1% of gross margin on the sale of this equipment. Means 30,000 represents 1% of gross margin. So it means you can calculate gross margin. Correct. Based on the past experience, it is expected that 1% of equipment sold have been returned as faulty within the warranty period. 1% of equipment sold will be returned faulty. Faulty equipment returned to XYZ Limited during the warranty period are scrapped and the sale value is fully refunded to the customer. So whatever equipment is returned, that will be scrapped, means nothing is realizable from that, and the entire amount is refunded to the customer. Assuming that sales occurred evenly during the year. Evenly means monthly sales are equal. How should XYZ Limited evaluate whether any additional warranty provision is required on the equipment sold in the past as at 31st March 2002? So what they are saying, they have created a provision of 30,000. Should we create any additional provision? Had the warranty period been 2 years instead of 6 months, what additional criteria would be also considered? This is the entire question. First we'll do case number 1. This is the case number 2. There are 2 points they have asked. So can I say 30,000 is the provision and 1% of gross margin. So we can find out gross margin. So you can see what they have done. Can you give me what is the 30,000 divided by 1%? How much? 30 lakh. So this 30 lakh represents 40% of the total sales. So divide by 40%, how much? So 75 lakh is the total sales of the year. You can see they have given total sales was 75 lakh, because warranty is for 6 months. So we'll only consider last 6 months, because first 6 months of warranty expired. So only last 6 months we should consider. So last 6 months is 6 by 12. This becomes 37 lakh 50,000. And they are saying 1% of total sales can be returned. So 1% of this is what? 37,500. Means this amount will be refunded to customer. But they have created a provision of how much? 30,000. It means additional provision required how much? 7,500. Because okay, it is 6 months. Time value of money is not matter here. Therefore, it will be a discounted amount. Sorry, undiscounted amount. This point have you understood? The second point what they have saying, if it is 2 years, then what will take? The 2 year token is will take entire sales of that year. So we'll take entire sales 75 lakh. So 75 lakh 1% 75,000. So 75,000 minus 30,000 45,000. And can you see we should also consider discounted amount, but discounting rate is not given. Therefore we'll ignore it. Correct now. But they have given in this. If you remember, see the solution. Since the outstanding period of warranty is 6 months, no discounting is required. However, if a longer warranty period is to be given, the entity will have to take into account the effect of time value money. The amount of provision shall be the present value of the expenditure expected to be required to settle the warranty obligation. Understood? Correct. Good question only. Sometimes these type of questions are those questions. This is one question which is newly inserted. First you read, I will not read. Newly inserted question. You can see RTP November 2020. Newly inserted. Always newly inserted question are very important from exam point of view. Correct. So first you read. This is a very good question given. Interesting question. That on MRQ. MRQ means what? Must revise before exam. Correct. Must revise question before exam. Understood? But does this question first you do by your own? Let's see whether you are able to understand or not. And if you are able to understand, means you have understood this chapter. Am I right or not? So I will not do. I will discuss this point tomorrow, next class. But first you do by your own. Correct? So this question is homework from my point of view. All whatever I have given, all questions are homework. Balance question whenever you have time, do it. So whatever question I have said, that is must do. That is must do. Chalega. So can we start a new chapter? Or we'll take a break. After break we'll start. So we'll take 10-minute break. Now, can we start once again, everyone? Chalo. So, IND AS 37 completed. So, today you need to complete all the questions. Today only, huh? So, one question might take 5 to 6 minutes. Okay. So, I think around 30 questions will be there. So, you will be able to complete in what? 1 hour, maximum 1.5 hours. Correct? Now, right now what you will do, just read question, frame your answer in your mind, and then read solution. Correct? Don't waste much time on analyzing the question. Correct now? Read the question, frame solution, whether provision will be created or not created, or what will be the amount that you just do in calculator. Read the solution. There is no need to practice much. Once you are confident about a chapter, then practice will start. So right now in 1 hour or 1.5 hour, whatever you are doing, try to complete all the questions, so that you will have a confidence that yes, we have understood all the questions. These are the types of questions which can be asked in exam. Got this point? Yes, sir. Now, next chapter, whatever we are going to start is event after reporting date. Means IND AS 10. Means corresponding AS is what? AS 4. AS 4. AS 4 was contingencies and event occurring after balance date. However, I think contingencies after introduction of AS 29 was covered under AS 29. So, AS 4 was more or less related to what? Event occurring after balance date only. Correct. So, this chapter once again is similar to what? AS 4. AS 4, I hope nothing to discuss much. What is the meaning of event occurring? Yeah, event after reporting date. So, all events which are occurring after reporting date are not covered in this chapter. So, in this chapter we cover only those events which occur after reporting date but before approval of financial statement. So, you can see this is the reporting date and the date of approval of financial statement. So, we are only concerned about these events. We are only concerned about these events. Got this point? Now, when I say date of approval, so which is this date? Which date will be considered date of approval? Which date will be considered as the date of approval? When management approve it. When management approve it. Now, if you know Companies Act, so can I say as per Companies Act, first directors meeting will be held. And the directors meeting, it will be approved by the directors, and then it will be presented to shareholders for their approval, and it will be presented to shareholders in AGM. So let us assume, suppose this is the directors meeting and this is the AGM. So in AGM it will be approved by shareholders. In AGM it requires approval from shareholders. Now which date is relevant? Approval date of shareholders ki approval date of directors? Approval date of shareholders ki approval date of directors? Shareholders. No. Shareholder date approval, that is not relevant. Correct. Chalo theek hai, because you have done AS4, so you know this fact, so I will not discuss much on this. But the point is that why? Why this date is considered? Why not this date is considered? This can be one point of discussion now. Whatever you are saying, that is correct. Date of approval means what? Date of approval by whom? Approval by whom? Directors. You are 100% correct. But one doubt will come, so why not approval of shareholders? Why only approval of directors? Why this chapter only consider the date of approval by director? Why not the date of approval by shareholders? This can be one doubt now. Huh? Younger date what? What? This is not the reason. This is not the reason. He is saying longer period. We want to consider lesser transaction. Batao. Have you understood the point? The point that answer is what? As per the Companies Act, once it is approved by the shareholders, it cannot be amended. The financial statement cannot be amended. Means, can I say Once it is approved by the shareholders, I said, sorry, once it is approved by the director, it cannot be amended. The financial statement cannot be amended. Means, can I say, after this financial statement we cannot change? Means adjustment we can do only for these event. However, there may be some event which might be relevant for this period, which occurred during this period. But then also, once the financial statement is approved by the directors, it cannot be amended. It cannot be amended. Sometime what happen? Sometime what happen? As per AOA, etc., some special power is given to some of the owner of the company that they can reopen the books of account. They can reopen the books of account. Reopening of books of account means what? Means even though it is approved by the directors, it can be reopened by, say, any person, whoever that power has been given. So suppose any financial statement can be reopened at this point of time. It means, can I say, we need to prepare what? Financial statement after re-verification. It means it can be amended. It can be amended. In that case, the date of approval will be this date, when it is approved by that particular person. Means you need to find out who is approving, and after that approval, financial statement cannot be amended. That become date of approval. Means in normal circumstances, the date when it is approved by the management. Management means directors. Understood this point? Correct. So you have understood, here are those events which occur between reporting date and the date when financial statement are approved for issue. So when I am saying are approved, so it has been given a clarification. It is the approval of board of directors. Board of directors. Understood this point? Have you understood this point? Correct. Now this event can be either favorable event or it can be unfavorable also. Favorable means what? Giving rise to income. Unfavorable means what? Giving rise to expense. But one doubt will come, just try to understand. Correct. See, this is the reporting date. This is the reporting date. Understood this point? Now in Bachpan we have done one point, that any transaction related to this period should be only recorded. Means any transaction which occur after reporting date should be recorded after reporting date, means in next financial year. This only in Bachpan we have done, na? Am I right or not? See, any transaction which occur in this financial year should be recorded in this financial year. Any transaction event which occur after reporting date should be recorded in next financial year. So the doubt will not come. See, any event which occur after reporting date should be considered in this financial year. Should be considered in this financial year. Yes or no? Now, abhi to I have not done adjusting even non-adjusting even. So that too you know. But if I am teaching for the first time, you don't know that point, na? Just try to understand. My question is what? I am not discussing about adjusting event, non-adjusting event. We are discussing about this financial year. Means we are discussing about this financial statement. So my question to you is, any event which occur after reporting date should we record in this financial year? That is a question. First, try to understand question. This question they will ask in interview. They will say. So then so they will not ask second question, na? If you will think this much, they will ask second question. Are bolna re? You know, but you need to convince other, na? You know everything, but I am not able to convince you. It means your knowledge can't be applied. You are a knowledgeable person, but application of that knowledge is more important. Only knowledge will not do anything. You should apply that knowledge somewhere, na? Are you getting what I am saying? One second. What is my question? Try to understand what I am saying. See, right now we are doing this chapter for this financial year. We are doing this chapter for this financial year. The question is that any event which occur after reporting date should be considered in this financial year. This is the question. If you are saying yes, then why? If you are saying no, then why? To some extent. What some extent? Chalo. Acha, what was the adjusting event? Now I am coming to your solution. What is the adjusting event? One by one. Don't one by one. It means what adjusting event says. Adjusting event are those events which relate to the condition existing on the balance sheet date. It means we are not recording this transaction or event which occur after balance sheet date. We are just thinking about a condition which is existing on balance sheet date. Condition which is existing on balance sheet date. Means if it relate to the condition existing on the balance sheet date, it means, can I say it relate to this period only? Are you able to understand? Correct. So we are discussing about this condition. We are not discussing about this event. So any event which relate to the condition existing on the balance sheet date might give some confirmation about that condition. Might give some confirmation about the condition. So what I will do now, with some examples, I will just try to explain what is the objective of this chapter. What is the objective of this chapter? Correct. Understood? I hope meaning to you have understood event occurring after balance sheet date. The event occurring after reporting date are those events which can be either favorable or unfavorable and which occur after reporting date and the date when the financial statement are approved for issue. Some clarification has been given on the date of approval. In any case, the date of approval will be the approval given by the management. So some approval, but some clarification. If financial statement are to be approved by the shareholders after financial statement are approved by board of directors. So clarification is what? Financial statement are approved for issue on the date of approval by board of directors. This clarification has been given. If financial statement are to be issued to supervisory board of non-executive directors for approval after management approve financial statement, sometime what happens? We take loan from bank. So bank will appoint some of their officer as non-executive director of that company. In any case, in case of fraud, they will inform to the bank. So once it is approved by the board of director, it is given to the supervisory board consisting of non-executive director for further approval. Whether that is relevant for this chapter, that is not relevant for this chapter. Date of approval will be the date of approval by whom? Board of directors. Correct. Then point number C, if financial statement are approved by board of director after public announcement of profit or other financial information, what they want to say, let me inform. This point may be important from exam point of view. Suppose these are the 4 quarters of a financial year and we are preparing quarter report, quarter 1, quarter 2, quarter 3, quarter 4. Correct. Suppose this quarter 1 report is approved at this date. This quarter 2 report will be approved on this date. This quarter 3 report will be approved on this date. This quarter 4 report, let us assume it will be approved on this date. Correct. And board of directors meeting will be held at this point of time for the approval of annual financial statement. For the approval of annual financial statement. Understood? Means, can I say, if this quarter 1, quarter 2, quarter 3, quarter 4 information is already published, it means profit information is already given to whom? To the user of financial statement. Are you getting what I am saying? Quarter 1, quarter 2, quarter 3, quarter 4 reports are already approved, means it is published. If it is published, means, can I say, the public know the profit information of what? This company. Now on this date we already know the profit. Can we change this profit because of this event? Yes, we can change. Means for this is not at all relevant. Quarterly report and annual report are two different reports. Annual financial statement is not dependent on quarterly statement. Means the profit whatever we have disclosed in quarter report may be different from annual financial statement, and therefore date of approval will be this date, not this date. Understood? So this is clarification. Means what I am saying, all the clarification has been given by IND AS 10. In this case also financial statement are approved for issue on the date of approval by board of directors. Understood? Correct. Now you all know types of event. Events are of two types: adjusting event, non-adjusting event. No much discussion required. which provide evidence of the condition existing on reporting date. So adjusting event are those events which provide evidence of the condition existing on balance sheet date or reporting date. Understood this point? Okay. Means non-adjusting event are those events which relate to the condition which arises after reporting date. Means if any event relate to the condition arising after reporting date, that is not relevant for last financial year and therefore should not be adjusted. So which relate to the condition arising after reporting date are non-adjusting event and therefore no adjustment required. Can you say in this case adjustment required to the financial statement? When I am saying adjusted to financial statement means, can you say we need to adjust asset or liability and income or expense. So adjusted to financial statement means adjust your asset or liability or income and expense. Correct. Now what IND AS stands is that for non-adjusting even no adjustment required, but if the amount is material then a disclosure required in notes to account. So disclosure of such event is required in financial event, that is notes to account, if amount is material. However, AS4 used to say disclosure is required in the report of approving authority. This become one difference. Understood? Chalega. Now I will take some example to understand whether you have understood this chapter in CA Inter or not. Okay. So this example will help you to improve the concept of this chapter. Correct. If you want to write, write. If you don't want to write, then also write. Correct. All the examples. Means I will take very basic example which you have taken where? In your CA Inter. I will start with basic example and धीरे धीरे I will improve the example. चलेगा? Example number 1. थोड़ा सा fast I will write. Reporting date, date of approval. So you should write down with me. Okay. The reporting date there was a debtor. If you remember in CA Inter, the example they started with debtor only. And sometimes we think that this chapter is only for debtor. Am I right or not? The first example given by your teacher was debtor only. You remember? Debtor only, na? Every teacher will give that only. Therefore, I am also giving this. But I will try to inform you that this chapter is not only for debtor. Let us assume there is one debtor and the amount outstanding is 10 lakh. Amount outstanding is 10 lakh. And what happened? After reporting date, before approval of financial statement. So, I will not say bar. It is understood point. Means any event which occur after this is not relevant for this chapter, na? Is not relevant for this chapter. So, we are not discussing about that. We are discussing about only this event. We are discussing about this event. DOM is what? Date of birth. RD means what? This so you have understood now. You need to understand my emotions. Otherwise, you will also get emotions. I will also get emotions. Okay? Chalo. So, what happened? A fire occurred in premises of debtor and he become insolvent. The debtor become insolvent. Understood what I am saying? For the adjusting, non-adjusting. Adjusting, non-adjusting. How many are saying non-adjusting? So it means doubt is there, huh? You have doubt. Someone is saying adjusting, someone is saying non-adjusting. This doubt is there. First example of CA Inter, doubt aa gaya. Understood? You pass CA Inter exam without concept. Am I right or not? If the doubt is coming, means doubtful, na? So it is a non-adjusting event. It is a non-adjusting event. Batao. Whether there was any condition of non-payment on reporting date? No condition. Means this condition relate to the, this event relate to the condition arising after reporting date, na? Means this debtor become bad debtor. He was a bad debtor on reporting date ki after reporting date? After reporting date, therefore non-adjusting event. What is adjusting here? Nothing. So there was no condition on reporting date and therefore it is a non-adjusting event. Chalega. Example number 2. I am not writing reason. Reason so you can write down in your own words. Once again reporting date, date of approval. Once again there was a debtor. Amount outstanding was 10 lakh. And what happened? Credit period of 2 months which was given to him has been expired. Has been expired. It means, can I say he become a doubtful debtor? He become a doubtful debtor? Yes or no? Now he become a doubtful debtor. If credit period was allowed 2 months, he need to pay the amount within 2 months, but that has been expired on or before reporting date. So he become doubtful debtor. Now what happened? Because he was a doubtful debtor, so already we created an allowance. We are not writing provision. Correct now? Provision is a wrong term. Already I have said. We can't say provision for doubtful debt. We will say allowance for bad and doubtful debt. Already we created 2 lakh allowance as per the best estimate. But this allowance is created as per which IND AS? As per IND AS 109 coming soon. Till now we have not discussed IND AS 109. But we know provision for doubtful debt bachpan se. Now how to create as per IND AS 109, that will discuss. How to measure this amount, that will discuss now. Are you able to understand? Yes sir. So already 8 lakh is appearing in the balance sheet. Now what happened? On reporting date, whatever balance sheet we prepare, that is known as draft balance sheet. That is known as draft financial statement. Understood? So this is known as draft financial statement which is not yet finalized. Finalization will be after audit and after approval of what? Financial statement by board of directors. Correct? Understood? Now what happened? This debtor now declared as what? Now declared as insolvent. Batao. Adjusting, non-adjusting. Adjusting, non-adjusting. Adjusting super easy. Now it become adjusting event. Why adjusting event? Because relate to the condition existing on balance sheet date. So now the question is that what adjustment is required on reporting date? What will be the adjustment entry on reporting date? Remaining 8 lakhs should be? Means that there are 2 points. Let's see what you are saying. Should we increase the allowance by 8 lakh, or we should recognize a bad debt of rupees 10 lakh? Just try to understand. When I say bad debt, then our journal entry is bad debt to debtor. Means reduce the amount of debtor only. But when you create allowance, we don't reduce the amount of debtor. Debtor will be gross amount, allowance will be created and that will be shown as a net amount in the balance sheet. There are 2 different points. Bad debt means reduced directly from debtor. Yes or no? Correct? So which one is correct? Increase allowance by 8 lakh. See, we should recognize now bad debt only, because when I am saying bad debt, so debtor will remove. Means now debtor will not come in the balance sheet. When I am saying bad debt, so 10 lakh minus 10 lakh, now debtor will not come in the balance sheet. But when I am saying allowance, then we say debtor how much? 10 lakh less allowance how much? 10 lakh. Net impact will remain same, but presentation different na? Are bolna re? Correct. So which one is correct? First one is correct, second one is correct. How many are saying first one? So first one is correct. This is not correct. Understood? Are you able to understand? However, this is not at all important from exam point of view. They will never ask. But as a CA, you should know this fact or not. Just try to understand what is the objective of this chapter. Now let us come to the objective. I said now with example I will inform you the objective of this chapter. Now let us come to the objective of this chapter. Objective is what? Whatever information you are providing to the user, that should be the best information, true and fair information. True and fair information or not? Are bola re? Now you have a debtor of 10 lakh and how much allowance we have estimated? 2 lakh. But before approval of financial statement, it was understood that 2 lakh is not 2 lakh, 2 lakh is 10 lakh. Means you need to now estimate allowance at 2 lakh to 10 lakh. Before approval of financial statement, you have understood your estimation was not correct. You have estimated 2 lakh, but actually it should be 10 lakh, and that has been confirmed with that evidence. That is confirmed with that event. That event provide evidence of the condition existing on the reporting date. So what? We should now estimate 2 lakh to 10 lakh. 10 lakh because that has been confirmed before approval of financial statement. So what this chapter is saying that you need to measure at a correct amount, and if you are getting some evidence of that measurement before approval of financial statement, you should change the measurement. But can I say it become an actual loss in this period or next financial year? It become an actual loss of this financial year or next financial year. Actual loss happened in next financial year. So actual loss you record in next financial year only. Means in bachpan se we have done one order, we follow one order that is known as chronological order. Can you say we can't change that thing? Bad debt happened in which year? Next financial year. Actual loss occurred in which year? Next financial year. Therefore, bad debt journal entry will be done in next financial year. But estimation, whatever you are doing, that should be correct estimate if the amount, if the confirmation has been received before approval of financial statement. So this is the objective of this chapter. Objective of this chapter is to what? Record all assets and liability at best estimation, and if you are getting any confirmation of that estimation before approval of financial statement, adjust it. Adjust it. Understood? Have it. So why not in this then? You are getting before approval of financial statement 10 lakh is not 10 lakh, 10 lakh is what? 0 now. So you should create a provision. But we can't change our rule. This is not related to condition existing on balance sheet date. The condition arises after reporting date. It is not relevant for this financial year. It is not relevant for this financial year. But this is relevant for this financial year because already you have created an allowance. So that allowance should be at correct estimation. Understood now? Objective, I hope you have understood. Now with this objective, now all the answer will be based on it with this objective. Don't think about adjusting, non-adjusting. Apply your common sense now. Apply your common sense. One more example. One second data. Suppose 10 lakh and already you have created an allowance of bad and doubtful debt 2 lakh. Quite possible. This is a draft financial statement. Now what happened? You receive entire amount from the debtor before approval of financial statement. Quite possible. Means what happened before reporting that this person went to Pakistan. Now he will not return now. So you have concluded that now the amount can't be recovered. But he was Sunny Deol. He came back. Everyone can't come back, na? And so you have seen that movie Gadar. So only Sunny Deol can come. No one can come back from Pakistan. Sir, I am just kidding. So what happened? If that person now came and you received the entire amount from that debtor, but adjusting, non-adjusting. Adjusting, non-adjusting. Adjusting na? 100% correct. It means now you are thinking from objective of this chapter point of view. Objective of this chapter is what? Now the allowance was not required only. Because can you see, you have received the entire amount. It means he was not a doubtful debtor. If he was not a doubtful debtor, then why you are creating allowance for bad and doubtful debt? So it means what we'll do? We'll reverse what? Reverse entire allowance for bad and doubtful debt. Understood? Correct? Yes. Example number 4. Example number 4. That also you have understood. Let us come to some other point. Suppose there was an inventory whose cost price was 100 and NRV was 120. A fire occurred, inventory damage. Now inventory damage now. Damaged, and now NRV of this inventory is 60. But adjusting, non-adjusting. Adjusting, non-adjusting. Non-adjusting na? Everyone saying non-adjusting? Anyone saying adjusting? Non-adjusting, because it relate to the condition after balance sheet. Therefore no adjustment required. Therefore no adjustment required. Can we proceed? Example number 5. Can we proceed? A reporting date, date of approval, inventory, cost price is equal to 100 and NRV is equal to 80. Understood? So what is the meaning of NRV? Don't give me the full form, huh? What is NRV? Means what is net realizable value? Huh? Means it is expected. Next chapter is, I think I will take either IND AS 2 or IND AS 16. Next chapter. Expected selling price minus expected selling expense. Expected selling expense. Understood? Means NRV is also an estimation. NRV is also an estimation. Correct? Now, before approval of financial statement, the inventory was actually sold at rupees 60. But the adjusting, non-adjusting. Adjusting, non-adjusting. Adjusting, non-adjusting. Huh? How many are saying adjusting? Means till now not understood. Means you are in CA enter till now. Correct? Till now you are in CA enter. I have already given the objective of this chapter. You are not able to understand my emotions. Correct now. First thing, can I say NRB means one estimation? What estimation we have done? That it can be sold at rupees 80. Now before approval of financial statement, it was actually sold at rupees 60. Means it is confirmed that NRB is 80 or 60? 60 na? This was an estimation that it can be sold at what? 80. But actually sold at what? 60. It means it is now confirmed that whatever amount you have estimated, that was not correct. So correct it before approval of financial statement. That event occur. That event occur na? Just try to understand. Right now you are thinking 80 is very small amount. But if I say 80 crore, then profit will be affected or not? Profit will be affected. Entire profit or loss will be affected. So think about that. Magnitude can be high also. Are you able to understand? So can you see this is an estimation, we have estimated that it is 80. Now it is confirmed with the actual sale that it is not 80, it is 60. It is an adjusting event only. It is an adjusting event, na? It is an adjusting event. Correct. Have you understood this point? Example number 6. Inventory cost price is equal to 100. Are you getting what I'm saying? Now what happened? See, after reporting date, the demand decreases. Why? Because technology changes, etc. Quite possible due to change in technology. Correct. Understood. And because of that reason, NRB is now 60. Batao. Adjusting, non-adjusting. Adjusting, non-adjusting. Non-adjusting, adjusting. Everyone saying non-adjusting? Chalo, let us understand. My question to you all, you just think from business point of view. Suppose you are a business, you are doing this business, and this is what? A item, suppose mobile or any item related to technology. My question to you on reporting date, whether you are not knowing about technology changes, whether technology will change immediately, or that information you will have. Just try to understand. You are the business. You are doing business. So whether you don't know about the information of changes in technology on reporting date, or whether it will be sudden changes will happen. Just try to understand. Technology will change so that we know if we are a dealer of mobile, we know that new brand is going to come. So let us clear the stock. Let us clear the stock now. Normally, can I say discount will be offered? Why discounts are offered? Because they know that fresh arrival is going to come. So let us clear the stock so that information will be available with the entity or not. So that information, that condition was prevailing on the reporting date or not. Yes. Are you able to understand what I am saying? So when I am saying demand decreases, changes in technology, it does not mean it happens sudden. That information will be available with the entity on 31st March also. So whenever inventory become obsolete, it does not mean it is a non-adjusting event. It was an adjusting event only because the condition was prevailing on what? 31st March. I hope you are understanding. Are you able to understand? This is an exam question. This is an exam question where they have given an example of car. They have a car, and then due to obsolescence, etc., the NRV of the car become what? 60. Whether it is adjusting or non-adjusting, most of the student will say non-adjusting. If you think only about what? The chapter. If you don't think about the concept of this chapter, then everyone will give wrong. Can I say this condition will prevail on what? Reporting date, and therefore it is a what? Adjusting event, and therefore it is a adjusting event. Understood this point? This is important from exam point of view. Have you understood? Any doubt? Any doubt about this? Bolo. No doubt? Can we proceed? Example number 7. Suppose on reporting date there is a machinery whose carrying amount is 10 lakh and it was sold at rupees 8 lakh. बताओ adjusting non adjusting. Adjusting non adjusting. Non adjusting. ये तो non adjusting ना. That is non adjusting. Correct. Example number 8. There was one proposal to sell machinery whose carrying amount is 10 lakh before reporting date. One proposal to sell and it was actually sold at rupees 8 lakh. बताओ adjusting non adjusting. Adjusting non adjusting. Everyone is not saying, that's why I need to wait. Adjusting non adjusting. Non adjusting. Pakka. Non adjusting. Non adjusting because case it is only a proposal. It is only a proposal, na? It is only a proposal. Correct. However, just write down. Write down. IND AS 105 might be attracted. Might be applicable. Abhi I am not discussing about IND AS 105. Once IND AS 105 will come, this point automatically you will understand. So ignoring IND AS 105, it is a non-adjusting. So we'll discuss some points regarding adjusting, non-adjusting in IND AS 105 also. Correct? So this point once again I will take in IND AS 105 chapter. Chalega? Yes, sir. Example number 9. Now, suppose sale of machinery agreement done. Agreement already done. Understood? Carrying amount 10 lakh. Sale price 8 lakh. Got this point? One minute, one doubt came. Example number 6. Anyways, during inventory valuation, they would have calculated NRV and cost. No, sir. So if there is an additional information about that NRV before the date of approval, then it is an adjusting event. No, just try to understand. I am just creating one question from exam point of view. I am just creating one question. If this question they have given, it is an adjusting or non-adjusting that I am asking. And it is quite possible because till now technology has not changed. So it might have an NRV is 120 they have estimated because they have an information about changes in technology. But actual technology change might take some time. So they have estimated 120 and now due to change in technology it becomes 60. Quite possible. Now then also it is an adjusting event that I just want to inform you. No doubt over? Understood? Correct. Doubt came, therefore I have discussed. Example number 9. Example number 9, have you understood what I have said? Sale of machinery agreement done, carrying amount 10 lakh, sale price 8 lakh. This was one of the favorite question of CA Inter. But from my point of view, whatever whatever answer was given in CA inter suggested solution, that was not correct. But I also teach as per ICAI solution only, huh? So there I don't discuss that much. There I say adjusting Jindabad. Correct. But now that you are CA final student, so I need to give you the correct information. Suppose this question come, this is the reporting date, this is the date of approval, and they say that registration completed, registration completed before approval of financial statement. But adjusting, non-adjusting, adjusting. But actually this is not a question of IND AS 10. Actually it is not a question of IND AS 10. Normally in CA inter they used to ask this question as per AS 4. But I will say in this AS 4 is not applicable only. Just try to understand. When a sale has been done, so it is will be as per IND AS 16. As per IND AS 16 means AS 10. As per IND AS 16 means accounting standard 10. Now what IND AS 16 says that if control transferred, then we should de-recognize it. De-recognize it na. And if control not transferred, then do not de-recognize it. Are you able to understand what I am saying? Have you understood this point? De-recognize means pass sale journal entry. Do not de-recognize it means do not pass sale journal entry. Understood this point? Means this registration is only a legal formality. Legal formality. I hope if you have done substance over form, what is the meaning of substance over form? What is the meaning of substance over form? What is the meaning of substance over form? Do you know? Bolo. I'm asking something. Substance over form means what? While doing accounting treatment, just see the substance of the transaction, not a legal document. So registration completed or not completed, it is only a legal formality. That should not be considered to identify the control. Control can be transferred without a registration has been completed. Even though registration has not been completed, control can be transferred. So what IND AS 16 says that once control transferred, it will be de-recognized. Even though registration has not been completed. Are you getting? And if control is not transferred, then it will never be de-recognized. It will never be de-recognized. Means it is not a question of IND AS 10, it is a question about IND AS 16, I will say. Are you able to understand? So if in your exam the same questions come, refer IND AS 16 and just write down this registration is a mere formality, therefore that should not be considered to recognize the sale journal entry. Understood? Have you understood? If suppose they have said give answer as per IND AS 10 only, then I am not adjusting even. But I will say even though registration is not completed, it will be adjusted if the control has been transferred. Understood? Correct? Have you understood this point? Example number 10. I think all this example is giving better picture of this chapter. Correct? Reporting date, date of approval. Suppose on reporting date, there was some legal case pending, and as per the best estimate given by the lawyer, we have created a provision of rupees 10 lakh. We have created a provision of rupees 10 lakh. Understood? Now, before approval of financial statement, case decided. Are you getting what I am saying? Case decided. Either it can be in favor of company, or it can be in against the company, against the company na. Favor means now no compensation, nil amount. Against the company, the amount can be either higher or lower than 10 lakh. Suppose it is 12 lakh. Batao. Adjusting, non-adjusting in both cases. Adjusting, non-adjusting. Adjusting na means if it is favorable, then you need to reverse the amount of provision. If it is against, then increase the amount of provision. Understood? In both cases, it is adjusting. Have you understood? And now with this example, you will understand that point. It is supported by additional evidence in IND AS 37. IND AS 37, we have done one point now. I said we'll discuss where? In IND AS 10. This point. This point. Point number B, estimation are determined by management judgment. It need to be supported by any additional evidence provided by event occurring after reporting date. The same example I have taken. Means whatever estimation you have done, that should be based on any additional evidence provided by the event occurring after reporting date. Understood? Have you understood? Example number 10 also you understood. Example number 11. Correct? Sorry. I'm asking a good question now. The last example of final level. Let's see how you are reacting. If this you are saying correct, means you have understood the chapter. Now, what actually happened? Before the reporting date, we have decided to close down a factory. This is a question related to what? Question related to what? Close down a factory. Question related to restructuring. Today only we have done restructuring. Now before reporting date, management has made a detailed plan. Before reporting date, a detailed plan was made. But announcement was done before approval of financial statement. Announcement of plan was made after reporting date but before approval of financial statement. Should we create provision for restructuring on reporting date? Means adjusting or non-adjusting? Adjusting, non-adjusting? Everyone saying non-adjusting? But announcement was made before approval of financial statement. Both the conditions, very good, excellent. Means you have understood. Non-adjusting only, because both the conditions need to be satisfied on which date? On reporting date. It means there is no constructive obligation on reporting date. It means it relate to the condition arising after balance sheet date. So of course we'll create provision, but for the next financial year, not in this financial year. Understood? It relate to the condition arising after balance sheet date. Understood the importance of this chapter? It is a very important chapter for preparation of financial statement. Entire financial statement is based on additional evidence provided by the event occurring after balance sheet date. If you remember Bachpan mein trial balance used to be given with some adjustment. That adjustment is nothing but this chapter. All adjustment is nothing but this chapter only, na? Means we know this chapter from Bachpan only, but we are learning the concept right now, understanding the logic behind this right now. Already we have done, na? Adjustment 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 they used to give, and we used to adjust because all we are adjusting event. Correct? Chalo, this much you understood. I think done. Let me ask you one question, not important from exam point of view, but this type of situation you may find in your office. It is quite possible you may have came across also. Let's see what you What is your answer? Let's see. Example number 2, last question. Just try to understand. Two questions I will create. One is for receive of check and one is of issue of check. ठीक है ना? First, suppose there is a debtor. This type of question, so I think in CA Enter they have asked also. In CA Enter exam. Debtor. And suppose amount to be received what 10 lakh. And after reporting date, before approval of financial statement, what happened? You receive a check dated on or before 31st March. Means the date of check is 31st March or before 31st March. Correct? But check was received after what? Reporting date. Understood this point? Have you understood this point? The check date is what? Either 31st March or before 31st March. But you receive that check after 31st March and before approval of financial statement. Can you pass receive journal entry on 31st March? Understood? Means adjusting, if you are saying adjusting, means you want to pass journal entry. If you are saying non-adjusting, means it will not be passed on reporting date, it will be passed in the next financial year. When you record this journal entry, on this date, in the next financial year, adjusting, non-adjusting. How many are saying adjusting? How many are saying non-adjusting? Doubt. Still doubt. Understood? Doubt is still there. If in exam, so you will waste your time now. You think, so you will waste 5 to 10 minutes. Think logically na. Logically. How many are saying non-adjusting? So those who are saying non-adjusting, can you explain why non-adjusting? कि मजा आ रहा है, head and tell. Why it is non-adjusting? Because non-adjusting is correct. This is not an explanation, huh? Wow, wow. Whether I will be convinced with this explanation? Huh? You need to convince me. I already say you will get marks for best answer, not for correct answer. Your answer is correct, but I am not convinced. I will give 0 if I am checking your paper, because I am here to select what best out of you. They only will become 0. Think about your best answer, okay? Best answer, bol now. मजा नहीं आया. One second. No. This chapter is not always for estimation, huh? Don't think about कि always it will be based on estimation. Huh? No. I'll give you another example. चलो ठीक है. I'll give you another example. Similar type of question, but as different case study. Reporting date, date of approval. Correct now. Same debtor, 10 lakh. Now what happened? Check dated 31st March or before was received by agent, collecting agent before 31st March but handed over to company, yeah, entity after what? 31st March. Have you understood the point? Check dated 31st March or before 31st March, received by an agent, collecting agent. Collecting agent can be employee or it can be bank, etc. Any agent received by agent, but it is handed over to company after 31st March. But the adjusting, non-adjusting. In this case, you are saying adjusting, na? And in this case, you'll say what? Non-adjusting. This is non-adjusting. This is adjusting. Why? The reason is what? Just try to understand. This check was collected after 31st March. Whether it can be used on 31st March, whether this check can be deposited on 31st March, whether this check can be deposited or endorsed on 31st March. It means, can I say, it is not under the control of the entity? If it is not under the control of the entity, it is not an asset. If it is not an asset, the question of recognition will not arise. Understood? But in this case, because it is collected by the collecting agent, it is under the control of the entity or not? It can be endorsed to some other party. Yes or no? It means it is under the control of the entity. So keyword is what? Means if you want to convince someone, so of course your answer is correct, but I will say the best answer should be given mark. So you should say this check is not under the control, not under the control of entity on 31st March, and therefore it will not be an asset for the company, and therefore the question of recognition will not arise. Understood this point? But in this case it will be under the control of entity on 31st March, and therefore it become what? Adjusting event. Understood this point? Correct? Got this point? The last example, example number 13, last. This is also very basic example. This question was asked to one of my student in interview. I don't know whether this type of question will be asked in exam or not. Interview pucha. Normally what happens when you will go to interview and you will come to me, I'll just write down what are the questions they have asked to you. If I found interesting question, I discuss in what? Class. If I find. So this question was interesting only. What they have asked? The check was issued to a supplier before 31st March. Understood? Means already they have done one journal entry they have done payable account debit to bank. This journal entry has been done na? Payable or creditor account debit to bank. But what happened? Before approval of financial statement, check was dishonored. Means adjusting, non-adjusting. If you are saying adjusting means you need to reverse the journal entry. If you are saying non-adjusting, you will not reverse the journal entry in this financial year. You reverse the journal entry in next financial year. This is the meaning of adjusting and non-adjusting. So the adjusting, non-adjusting. And this type of situation might come with you also. Quite possible. Adjusting, non-adjusting. Everyone saying non-adjusting? Anyone saying adjusting? Adjusting. How many are saying adjusting? Only one. चलो why it is adjusting? Because adjusting is correct. देखो in class always correct answer is what? Minority. बोलना है ऐसा no, but this is only second third class. With 20 class now most of your answer will be correct, because what happened right now you are as per CA inter. I am just changing the process of learning. It will take some time. After 10-20 class now, whenever I will ask question, you most of you will say correct. It happens in my all batches. It will happen in these batches also. But first 10 days, because you are in CA inter mode, answer will not come. I will try to change you. With that change, your answer will come correct only. But why it is adjusting? Well, अरे तो you can know, but after reporting that nalayak, what is this answer? Huh? So condition, whether condition of dishonor was there on reporting date? Huh? Now what देखो क्या होता है अभी what I am saying. If you are answering, you are explaining now because you know the answer, it is not correct. Because now you are trying to explain because now you know the answer, it is an adjusting. You are just trying to match it. Yes or no? Am I right or not? Are you able to understand what I am saying? You have understood adjusting. Let us now explain. So it will not give correct explanation. The correct explanation will not come. You need to understand the scenario. I said become chartered accountant. Just try to understand if this is the situation. Then everyone will do this only. Because we'll try to show liability or we'll try not to show liability. In our balance, if liability is coming, it is good or bad? Bad only. Now, so what I will do? Will issue check and then will dishonor. It is window dressing. अरे बोलना रे. Suppose there is a liability of 100 crore. What I will do? Will issue check and then will say dishonor. Am I right or not? And just try to understand. Even though a check was issued and now it dishonor, can I say it is the responsibility of management to keep minimum balance? And if they are not maintaining that balance, it means the information was known to them. It will be dishonored. So it is the duty of the management to keep minimum balance to that amount so that a check is not dishonored. If they are not maintaining, it means there is the intention to make it dishonor. It means the information was known on reporting date. If this much balance is required, and if they are not maintaining that balance, so it is what? Their mistake. Now it means it is an adjusting event only. And it will be always adjusted. It will be always adjusted. Understood? I don't know whether this type of question will be asked in exam or not, but it was asked in interview. Got this point? The interview they will check your what? Skills. In exam they will check your what? Knowledge. Knowledge means what? Whether you know that subject or not. Skills will not be tested in exam. Skills can't be tested in exam. Skills can be tested in interview or in your practical scenario. Understood? Correct? One doubt came. Let me read. It can be a BRS item. Are BRS is something alag dunya. BRS is something alag dunya. I am not teaching you BRS. Okay. But in second situation, it is not with the collecting agent on 31st March. No, I am saying it is a collecting agent. It was collected, received by agent before 31st March. I have said was received by agent before 31st March. No. So it was collected by collecting agent before 31st March. You have not understood properly. Chalo. Understood now all points. So with this adjusting, non-adjusting we have understood. Adjusting, non-adjusting we have understood. Time also over. Correct. Well, 4 and 5. 4 and 5 you have doubt. Come to 4 and 5. Wait for 5 minutes. Everyone. 4 and 5. 4. 4 में first doubt about 4 one by one. But this is related to condition which occur after balance sheet date. Fire occur after balance sheet date, so it become non-adjusting event. Correct. So this is related. This is related, but to the condition arising after balance sheet date. Here I said already it is NRV, means something happened before what? It indicates something happened before what, 31st March? Yes or no? Therefore the NRV is less than cost price now. So it indicates that something happened before 31st March. It means condition was prevailing on 31st March and now it was actually sold at rupees 60. So this gives an evidence of correct estimation. So now we should estimate at 80 or 60? 60. Understood. It relate to the condition existing on balance sheet date. Now in this last example I said, here on reporting date I have not informed you anything. But the question has informed that the market demand decreases after reporting date due to obsolescence etc. And the sale price has came down from 120 to 60. Adjusting, non-adjusting. They will inform you this much only. You will say adjusting because this information will be available on reporting date about the market changes. About the market changes. Abhi what happened? I am just giving one example of this. You will appreciate. What happened? New scheme came. New schemes came. When the new scheme was announced, now I was having 300 stock of my books. 300 stock of books was happened. So can I say that will be applicable for one more attempt? Now 300 books, quite possible it is not sold. Quite possible it is not sold. What I have done? I have reduced my prices 50%. I have sold entire my books in 50%. Why? Because announcement came about what? Applicability of new scheme in the May 24. But for November 23, I have reduced the prices of all my books because I want to sell all my books at lower profit margin. There was some profit, but lower profit margin. Yes or no? Businessman, I know this position or not? I know all the points, so I will say no, I don't know about this situation. This is not correct. Whatever is happening to your business, you all know because I am a businessman. I am a businessman na. Are bolna. So if I am dealing with such type of inventory, so of course I will be aware about the technology changes on reporting date only. On reporting date only. Therefore this will be an adjusting event. Therefore it will be a adjusting event. Understood this point? I hope you have understood. Chapter is not yet completed. There are 3 special points left in this chapter that we'll discuss tomorrow. Correct? So there are 3 special points A, B and C. This all we'll discuss tomorrow. Okay. Thank you very much. We'll meet tomorrow. Till then, bye bye. Take care. Enjoy your remaining day. Bye bye. Achha, those who are live classes, from tomorrow there will be no YouTube streaming. So please join the app. Please join the live class app. Okay. And if you are finding any problem in that app, consult our technical team. Already the WhatsApp group link has been given to you. So if you are finding any trouble in installation of that app, contact our team. And about you, please collect the books. In class without book maja nahi aata hai. Okay. Okay. So if you have not received book, collect the books. Okay. Chalo. Thank you very much.